Good afternoon and welcome to India Today. I'm Anjali Istiwal and we begin this bulletin with news coming in from Kolkata, which is crippled due to heavy rains just ahead of Durga Puja. And now news coming in is that the airport is also affected. Operations at Netaji Subhash Chandra Bose International Airport were severely affected on Tuesday as bad weather led to the cancellation of about 30 flights and delays to 42 others. Now, this information has come via the Kolkata airport officials. Also, the Kolkata airport has tweeted out an advisory telling people to be careful about their travel. Joining us now from Kolkata live is Indrajit Kundu. Indrajit, what's the situation now at the airport and what would be the advice to the people who were planning to catch flights today?
Well, this is the information that is coming out from the Kolkata airport. 30 flights, flight arrivals. Those flights were supposed to land at the Kolkata airport. Now, those stand cancelled. There are another 42 flights. It includes both arrival and departure. They are running delayed. So they are scheduled, but they are delayed. So we were speaking to the Kolkata airport authorities this morning. They said that, they were trying to pump out water in the apron area. But the overall weather and the climate is such that, it's not permitting the landing of several aircraft. So therefore, 30 flights have been cancelled, which were supposed to arrive at the Kolkata airport, and another 42 now delayed, and we will have to wait and see how those pan out. So clearly, it's not just the metro network, it's not just the suburban railway, but even flight services now getting affected at the Kolkata airport. So it's a really precarious situation for city dwellers here. Kolkata, it's in itself facing a massive deluge. With most, the Kolkata Municipal Corporation, the mayor saying that something of this sort was last witnessed in 1978. So several decades, we haven't seen this mega deluge coming as it is just a week ahead of Durga Puja, which is a double whammy for the organizers who are actually, giving finishing touches to the Durga Puja pandals. We've seen, very sad visuals of pandals, completely flooded. And in the meanwhile, there is also the process of taking the idols to the pandals from the idol makers colony. That is also underway, which is also getting hampered. And suburban railway and the metro also truncated. So difficult, day for Kolkatans here in the city.
Absolutely. Stay with us, Indrajit, as we bring more news in about these rains and the impact they are having in the city. Now, an unprecedented disaster situation has arisen in the state following the advice of Honorable Chief Minister to provide relief to students and protect them from accidents during this disaster. It has been decided to keep all schools and higher education institutions in the state closed tomorrow and day after, that is 24th and 25th of September. Going back to Indrajit, we will be connecting with him soon, but before that, let's just inform you what's happening in Kolkata city, especially with the waterlogging seen on the streets. You see two visuals on your screen there. Commuters struggling as big, huge buses make their way through flooded roads. But on the other side, another lighter side of this disaster. Children enjoying the same very water, which is causing huge challenges for the commuters, to the citizens, to the residents over there as they head back home or go to their work. Although remember, they have been advised to stay at home by the Chief Minister. Now joining us now is Indrajit Kundu once again. Indrajit, schools, institutions have also been shut for 2 days. Do tell us what is the IMD's prediction for the rains, and this measure, is it precautionary?
Well, that's right. It is a precautionary measure, and as a measure of caution, the West Bengal Education Department has now announced that for the next 2 days, all schools and higher educational institutions will remain shut. The Calcutta University has also postponed all its scheduled exams that were supposed to take place today. Obviously, given the kind of emergency situation that has now emerged, all emergency services have been put on alert. and school and colleges will remain shut because it's extremely difficult for movement is extremely restricted in the city. As I said, the lifeline of the city, which is the metro, north-south metro system, continues to remain truncated because the southern segment, there is water leakage inside the metro, and therefore the engineers, as a measure of precaution, have shut a segment of the metro in the southern part of the city. So metro is plying from the extreme north to the central part of the city. There are suburban railways which are also truncated. Long distance trains like Vande Bharat, they have been rescheduled, and now 30 flights have been cancelled, 42 others delayed. So connectivity to Kolkata also remains a challenge and an issue at this point in time, while the government agencies are monitoring the situation.
Right.
The Kolkata Electric Supply Corporation has also, suspended operations in certain parts.
Right.
There is load shedding as a measure of caution because 7 people have died out of electrocution.
Thank you very much, Indrajit, for all those updates. So clearly a challenging situation there in Kolkata. And now let's go across to Sakshi Batra of Business Today with all the updates of the markets. Sakshi, over to you.
Thank you, Anjali. Good afternoon and welcome to Market Closing on our brand new collab show between Business Today and India Today Television. I'm Sakshi Batra and it's 3 p.m. and we are here to get you all the market closing action right now. First up, let's take a look at what's hot in the world of corporate as well as financial space. Tech, FMCG, consumer durable stocks continue to fall for the second day in a row. Autos and banks, however, and the metal sectors keep the indices out of the red. Wild volatility in the Sensex as well as the Nifty. Rupee hits an all-time low of 88.8 to the dollar, even as gold and silver continue to scale new highs. Private sector activity in India expands at a slower pace in September, with both manufacturing and services PMI showing a drop from 17-year highs in August. HSBC attributes the fall to slower rise in export orders because of the 50% Trump tariffs that kicked in early August. Two more Indians rise to the top position in the US. Srinivasan Gopalan to head T-Mobile from November, and brewing giant Molson Coors appoints Rahul Goyal to steer it through the economic climate. Both leadership and more Indian faces to the American CXO list, and come at a time when Indian talent is under attack by the Trump administration. Swiggy food marketplace CEO Rohit Kapoor exudes optimism as the festive season gets underway. Tells Business Today Television in an exclusive conversation that the company is on a strong footing with deals and promotions lined up. Claims new GST charges on deliveries are too small to impact food prices. Remains bullish about the prospects of quick commerce. Government working to ensure GST cut benefits are passed on to the consumers. Central Board of Indirect Taxes and Customs says it is watchful of profiteering by the companies. Adds fuel ATF will not be brought under GST for at least another year till the rate cut dust has settled. All right, viewers, let's start off by looking at how the markets are trading in the last half an hour of trade. Well, remember, we have been looking at some pressure building up into the markets right from yesterday, right after we've been hit by that $100,000 H-1B visa fee that pulled down the IT sector lower. The Nifty again has been pretty choppy through the course of the day as well. Although we pulled up from the day's lowest point, the Nifty Bank, however, has managed to pull up into the green, 0.3% higher in trade, but it's the IT index index that continues to slip for the second day in a row this week, and you've seen a 0.7% decline on that front. What is, however, picking up pace and bucking the trend is the PSU banks. That's the state-owned banking stocks, over 1% higher now. This is the top moving sectoral index, followed by metals that are shining bright, again 1% higher in trade. You have the auto stocks that are continuing to reflect the GST rationalization benefit and enthusiasm into the stock prices. Look at the auto space, it's up by 0.6% in trade. Even the banking space, remember, when there is a demand for more cars, more consumer durables this festive season, there will also be more demand and higher demand for financing that. And that is a job that banks and NBFCs do at large. And therefore, you see some uptick on the banking and the NBFC space as well. Which are the top stocks that are doing well today? You have IndusInd Bank up by 2.6%, top mover in trade. Axis Bank that had got brokerage houses updates today, 2% higher. Adani Enterprises continues to move up. Remember, the third day of a move on the higher side for the Adani Group flagship major. JSW Steel and Bajaj Finance and even Maruti Suzuki hit a record high level in trade today, buoyed by the enthusiasm of the festive sales cheering on day one of Navratri itself. But what's on the back foot? Again, some IT names there. You have Tech Mahindra, that's down in trade. You have Trent from the retail space, profit taking now here. You can also look at SBI Life, Nestle and HUL from the FMCG space, that's on the back foot right now. But let's welcome our guest on board. Devarsh Vakil, Deputy Head of Retail Research at HDFC Securities, is now joining in on the program. Devarsh, good afternoon to you. Help us understand what's your take in the markets. We have seen everything that is going right in the economy. Look at the GST cuts that have taken place. The reforms push is continuing. We have had in the past the GDP growth also pushing in higher, but whatever right could happen is happening, but the markets are actually still struggling. What do you think is the key reason?
Right, just a correction. I'm the head of prime research. The designation is the lower. But anyway, so the markets have been struggling. There are 3-4 key reasons why the markets have been underperforming. If you see the last 1 year, we are more or less flat. The reason I could see are primarily 3 reasons we can point out. The first is the earnings growth. We have seen that the last 1 year, the Nifty on aggregate, we have earned about 8% or so, which is little below market expectation. So that is the reason why the prices have been consolidating after the rally. The second is the valuation. See, compared to the emerging markets, the Indian MSCI, Indian index is trading about 20 times next year. Earnings compared to MSCI emerging market is about 12 times. So earlier at the beginning of year, we were at about 85% premium to the other emerging markets. Now the premium has narrowed down. Now we are at about 65% premium, but long-term average is around 50% premium. So there is still some premium loss may happen compared to other emerging markets. And third is, as you just mentioned, there are some geopolitical concerns, the trade policy concerns, and the recent one, which is the H-1B visa you spoke about. So these are the reasons why our markets have been consolidating for the last 1 year.
So Devarsh, what are you doing at this point in time, and what are you advising investors to do at this point in time? Take this as an opportunity, the consolidation in the markets, and start accumulating stocks or maybe even sectors, focus on your SIP, mutual funds as well at this point in time to continue to take the benefit of the consolidation in the markets, or should one hold on to the cash that they have?
No, I think this is an excellent opportunity. This consolidation is an excellent buying opportunity for the overall longer term market. See, Indian structural growth story is still intact. We were actually prices moved little ahead of the fundamentals, and we are consolidating now. The earnings will revive in the second half. We have already seen the income tax cut, GST cut, monsoons have been good, and now we are also seeing that the revival in the consumption, like yesterday we saw on the first day of Navratri, record buying has been seen across various categories. So I think the second half is expected to be good. I think rupee has also depreciated. So one of the concerns which FI had, that also has played out, and going forward, we think that the selling will abate, and that should also help the market stabilize and move higher. So, if you are a long-term investor, if you are doing investing or building a portfolio through systematic investment plans (SIP), then there is no better time than this to keep accumulating those units. Eventually, prices are slave to the earnings, and as India's demographic, India's growth story will pan out, prices will move higher, and that will help you generate wealth.
Okay, so Devarsh, we've also got this data today. India's private sector activity seems to have lost some momentum in September. It has slipped from record highs that we saw a month ago. The September flash of a composite PMI output index has fallen to 61.9 from 63.2 in August, while the manufacturing PMI has also slipped to 58.5. Services have also slowed down to 61.6. So these are all the numbers, but help us and our viewers understand what does it really mean? Will this also pass, because is it only a blip in September? Will we again get to see on the manufacturing services data going forward from here reflect what you pointed out, the GST rationalization?
Correct. So there are some seasonal factors also. We had heavier than usual monsoon, and that do impact the logistics and the manufacturing sector for the last couple of weeks. But I think we are at the fag end of this. We are already seeing other high frequency data improving, and when we actually will see the October month, when the second quarter earnings will come out, we are hopeful that it will be a much higher earnings that should support the prices. So these little blips which are there, it is part and parcel of the markets. The data will not move in one straight line, but obviously there will be some bumps across the road. But we have to keep an eye on the longer term, and I think we are at a good juncture to start accumulating stocks.
Fair point. Devarsh, hold that thought there. We are going to be now focusing our attention to the entire auto sector, which you also pointed out in your opening comments, has been reflecting of the kind of demand we have seen because of the next generation GST reforms on day one of Navratri as well. Some record numbers have been shared by a lot of OEMs as well. And we are now going to be trying to understand how the auto sector is, hoping for this entire festive season to really pan out in trade. We are now joined by a special guest, Mr. Sai Giridhar. He's the Vice President of FADA, and he joins in to share with us what exactly has panned out till now. Mr. Giridhar, warm welcome to you. Good afternoon. Help us understand, first 1.5 days has passed on from this GST cuts. There was a huge anticipation in the auto sector of these dates. We were waiting with bated breath. What have you observed in terms of key numbers, in terms of key metrics that you can explain to our viewers, sir?
First of all, thanks for having us here, and it's better than expected. That's what I can say. We were expecting a surge because the inquiries were actually on an all-time record high, but the bookings were not happening to that extent. So the inquiry to booking ratio was not to the level of expectation, but yesterday was a record-breaking day for us. And in fact, I believe most of the OEMs, most of the dealers, our members across India would have probably this would be the record month for them in last 5 odd years. So
record month. It is going to pan out in 5 odd years if you compare with the kind of numbers that are floating in already. Can you give us a breakup on day one across dealerships? What have you seen in terms of where has the demand been seen maximum? Is it the entry-level vehicles? Is it the mid-size or the luxury ones? How have you looked at that aspect?
So this time it's a bit different. It's all across. It's not limited to 2 wheels or 4 wheels or even 6 wheels, 8 wheels. It is all across because the GST benefit is across segment. It is ranging from 2-wheeler to entry-level cars and even to luxury segment. So even luxury segment generally over the years what we've seen is we've never seen this kind of a drastic reduction in price. At least in my entire automobile career, I've never seen this type of a drop in prices. We've always anticipated an increase in price. The budget is coming, the prices will go up. This is the first time that we are experiencing this, so probably the budget mahotsav, as our Prime Minister is calling it and terming it, probably that's what is quite evident all across the showrooms across India.
Absolutely. So now, Mr. Giridhar, please go on.
So the only concern which I want to raise a flag out here is probably it would be on the terms of logistics, because see, most of the dealers also were holding back on their wholesales from the OEMs. So even the wholesales have started yesterday. So how soon those vehicles will reach the dealership, and the balance wholesales, which will probably be
Yes,
done
that's
in
the exact
next
point
few
that I
days.
wanted to actually come to you for. We've also seen a lot of, visuals from yesterday that there were queues outside dealerships right from the morning. Your phones kept on ringing for multiple inquiries. Even your online inquiries have crossed all kinds of parameters on day one of Navratri as well. So what will happen if people are waiting for their vehicles to be delivered? Will they get delayed because of such a huge demand?
So, to the best of my knowledge, as on day, we are still hopeful that we'll be able to deliver, because see, we knew that this particular thing will happen. All the OEMs knew that this is what in store with us. So
Yeah.
everyone had made arrangements for this. So like I've spoken to a few of the manufacturers, they had anticipated that they have to dispatch, and they've done 2x, 3x preparations for their dispatches. But the
Right.
main issue would be in next probably 4 or 5 days, because you will again require those crawlers back to your plant to dispatch the next lot of vehicles. Then it will become a problem. From the banker's point of view, if you talk about on the retail finance, they need to process all these, because what we are talking about is we are talking about 2x or 3x of business which we had done last year during those same Navratris. So if I can just throw some numbers, last year it was round about 8.5 lakh odd vehicles which got registered during these 9 days of Navratris. This
Okay.
time we are talking about at least what between 17 lakhs to above 20 lakh vehicles we are targeting. So it's a huge number. It requires a lot of logistics. It requires banks to remit the payments. The circulation has to be there for everything. So it's a huge task.
So there you have it, viewers. That's the key headline that Mr. Giridhar has mentioned. Last Navratri, the 9 days cumulatively led to 8.5 lakh vehicles getting registered. But this time around, the number is expected to swell to over 17 lakh to even up to 20 lakh units getting registered in just 9 days. And that is led by the GST cuts. Mr. Giridhar, just hold that thought there. I'm also going to be going across to my colleague, Chetan Bhutani, who's joining in, who covers the auto sector for us. This momentum is not just limited to the new cars and new vehicles. The demand is also trickling into the used car markets as well. Go on, Chetan, tell us, what have you found out?
Well, I was pretty surprised when we got to hear from those numbers from Cars 24 about the massive surge in demand in used car segment as well. So it's just not new cars. We have demand from the old car segment as well. In fact, used Cars 24's, in fact, co-founder had tweeted that 400% deliveries done on the first day of the Navratra. In fact, the inquiries had also surged 5 to 10x, and a whole lot of numbers coming out from the used car segment. In fact, so if you see when somebody plans to buy a used car, you definitely have to get that car inspected. So Cars 24 on the first day of Navratras undertook about 5,000 plus inspections, which amounts to literally doubling of inspections that they do on an average, festive season. So clearly strong demands coming in from metros like Ahmedabad, Pune, Delhi NCR, Bangalore and Calcutta as well. So clearly, all in all, the whole automobile segment is getting that demand that we were talking about.
Absolutely, Chetan. Thanks for tracking that for us. Mr. Giridhar, coming back to you towards the end, help our viewers understand, for those who've still not, gone out to the nearby dealerships to inquire about the bookings, maybe they haven't made up their mind yet, and are probably facing a lot of FOMO as well. Maybe they have this thought that they must buy. Will they get a car? Will they get their choice of vehicle now? And what is the best time to go ahead and probably go to a nearby dealership and book that vehicle now?
See, we've been telling this from last 10 odd days that the best time is now. Go to your dealership, book your car. If you have the variant and the color of your choice, don't even blink. Just book that car, because it will be too late. You'll not get the vehicles by this Diwali also, if you decide, or you still keep on waiting or holding your horses.
Okay, fair point. Thank you so much, Mr. Giridhar, for giving us all of those insights. So the best time is now. Do not wait if you've made up your mind that you have to go ahead and purchase your vehicle of your choice because of the GST rationalization. Otherwise, the wait will be too long. You might not even get your choice of vehicle by Diwali. The demand is absolutely unprecedented. Thank you so much, Mr. Giridhar, for sharing with us all those insights. Going back to Devarsh now. Devarsh, you've heard the entire auto experts and as to how they are are talking about the huge unprecedented demand here. We've already seen the auto segment reflecting this in the stock prices. From last 1 month, 15 to 30% of a rally in individual stocks has already come in. Maruti Suzuki has hit a record high in trade today. In fact, what we are also given to understand is that there's a 1 lakh crore boom on the market cap front. Maruti Suzuki on the stock markets front has turned out to be the biggest GST winner with a 26% rally that we've seen across last 1 month. What's exactly your thought on the auto space, and what would be your choice of stocks be there?
Sure. So as you said, the demand outlook remained positive. We actually prefer the two-wheeler and the tractor side of the markets. Most of the OEMs are suggesting mid-single-digit growth. Earlier, they had a price pressure, and now the favorable interest rate cut, the GST cut, the softening in push cost, all this will lead to the boost of the margin. So we have been bullish on some two-wheeler stocks, some four-wheeler stocks. In fact, for 2025 year, the yearly pick, one of the picks were Maruti, which has done phenomenally well. Still, from these prices, I think Ashok Leyland in the commercial vehicle side, still there is 20-25% upside left from our target price. Maruti has run up, as you just mentioned. There is some still 13 to 14% upside left from our target.
There is some
here.
upside left.
And one can look at TVS Motors and Eicher also.
Okay, hold that thought there. We have a breaking news coming in, and I want to highlight for our viewers, this is good news. Big thumbs up for India's economic growth story. OECD has raised India FY26 growth forecast by 40 basis points to now 6.7%. Most of our internal targets were 6.5%, be it of RBI and our own government's forecast as well. Remember, these are the external agencies of the world that are now bullish on India. OECD has also cut India's FY26, that's the financial year of 2026, inflation forecast by 120 basis points to 2.9% as well, which means they are bullish, growth will increase and inflation will dip further from here. OECD has said that US tariffs will be weighing on India's export sector. However, OECD believes economy is supported by the monetary fiscal policy easing, and the GST reforms are a big support for India's growth going forward. So right a day after GST 2.0 rollout has been seen, there are external agencies in the world who are betting big on the India growth story, also believing that GST cuts will lead to lower inflation and good news for the common man as well. Coming back to Devarsh on the front. So definitely there are hopes global agencies have penciled in that India's economy is going to get a fillip, a support from all these reforms-oriented push that we are getting. How are you looking at some of the other consumption-oriented sectors beyond autos, consumer durables, for instance? How are you looking at FMCG, for instance? Maybe even leather goods, retail space. People will be going to buy their footwear, clothes as well, which have got cheaper. People will be buying a lot of personal care products that have got cheaper as well. How are you looking at all of these sectors now?
Right. So, as you mentioned, because of the GST cut and interest rate cut and good monsoons, we are expecting that the urban demand, which was slow, should start picking up, and we have seen the early signs in the yesterday's sales. So yes, we are expecting a good second half for all these companies. There are many sectors which you mentioned. I'll take one of them, say consumer durables. There are some stocks like Amber Enterprises, Crompton Consumer, and Symphony, where we have our coverage and the targets are higher from market prices. So if somebody were to look to invest in these, they can have a look at these names for a long-term investment.
Okay, let's also look at how the festivities are being seen by the quick commerce segment as well. With the festive season underway, Swiggy is seeing strong momentum, particularly on Instamart, where lower prices and GST cuts are actually giving consumers an edge as well. In an exclusive conversation with Business Today Television's Abha Bakaya, CEO of Swiggy Food Marketplace Rohit Kapoor had this to say. Let's listen in.
Just, an update from you, Rohit. With the GST Council bringing delivery charges under Section 9, platforms will now be directly liable. So will Swiggy absorb the cost or pass it on? Any impact you foresee on margins, order volumes? Just your reaction to the changes in GST.
No, I think overall, look, I think because I always look at these measures not in specific to the company that I'm running right now, but also what's doing to the economy, because any extra money in the hands of the consumers is net good, right, for us. So that way, I think the GST regulations and the changes which have come are going to be very, very welcome, because it just puts money in the in the hands of the consumer in a big way across categories, right? For us, I think the impact is not that large. So I don't think it's a material, on the food delivery side, it's a material impact. I think we are still, we are following whatever has come. And I think on the Instamart side especially, I think there's a lot of goods which are now cheaper, right? Simply because it is, and that's the bulk. Actually, if you see what impacts consumers coming out of our platform, it's far more I know Delphi is more talked about, but definitely it is the reduction in the price of goods, which we where Instamart is a marketplace, that's being impacted a lot more in a positive way. So I think net from the platform, what you're seeing is coming out is probably a cheaper proposition to the consumers because of the GST changes. Very, very welcome at this point in time. Yeah.
Rohit, I know you said you don't necessarily give outlook, but it is festive season, and we're, watching the impact across the board as consumption picks up on auto, gold financiers, several segments of the economy, as you mentioned. Just a closing comment from you on really what Swiggy is looking forward to seeing this festive season. It is a big one for all players, and I'm sure you're also looking for this quarter to, of course, be lifted on the back of that.
So ONT is a quarter where I think the weather's better and everything is better, right? Typically, we actually kicked it off quite in earnest with the Quick India Movement sale, which is going on till 28th, and huge deals offers on Instamart there. But I do expect that we are riding into the quarter reasonably on strong footing. So it's just more strong footing on ops, on supply, on categories, everything. So, look, I always believe about the macro we never control, right? It's very hard for us to control the macro or even think about it beyond a point, because it doesn't. It matters a lot, but it's only that much you can influence. But overall, I see the sentiment picking up. I also see, hopefully, the GST changes will come into place on 22nd of this month will also help. Very positive. Also, it's a great quarter usually for a lot of action and activity and excitement. So I look forward to it always. But I don't see this honestly as any big difference from last OND in terms of just opportunity size. Yeah.
Shift focus to the market closing. The markets have shut shop on a lower note at 25,169, 0.1% of a loss there, with FMCG, real estate, IT sectors losing in trade, but PSU banks, metals, private banks as well, and financial services, banks taking the lead today. Remember, it's the weekly contract on the Nifty, so the banks have really pulled up higher, but the consumption-oriented sectors have seen some profit booking take place. Top movers, IndusInd Bank, Axis Bank, Bajaj Finance, JSW Steel, and Maruti Suzuki. Of course, record closing highs for this one. And towards the end, when we look at the laggards, Tech Mahindra, Trent, SBI Life from the insurance space, Ultratech Cement, and even FMCG players, fast-moving consumer goods, Nestle and HUL, seeing some profits being taken off the table as well. But let's go back to Devarsh to try and understand what the questions that are coming in from our viewers today. Devarsh, we have two questions from our viewers who've asked you. Tanushri Bhatinda wants to know about which is the best sector to invest in the festive season.
So, we should look at investment with a little longer term perspective, not just for the festive season. And I think a couple of sectors which do look attractive from now. One is the PSU banks, which we have mentioned, we have discussed. There, the possibility of earnings growth and eventually mergers and acquisition will make it attractive for longer term investors. Another one is the government focus on infrastructure and the healthy revenue growth we are seeing in the cement sector. I think volume-led growth plus price hike and the reduction in the GST rates will make a strong quarter for these companies, particularly in the east and the northeast region. We are seeing a lot of growth. So, cement, maybe pharmaceutical, and PSU banks. These are the three sectors. If I were to look at new capital, I would look at these sectors now.
Okay, the next one that we have is from Kolkata. Rana asks you, for long term, should I invest in large caps, mid caps, or small caps as well? Not a definition of what is a long term, but if one has to say that if somebody is a long term investor, what would you vouch for?
So it depends upon his risk appetite and his return expectations. The large caps are usually stable. They have a steady business model and they are well-known companies. So you get the information about corporate developments, so you can track your investment easily. But if you are looking for higher returns, then eventually the smaller or the mid-cap companies do become larger and they give you more return. So I would say, depending upon your age and the risk profile, you can look at these large cap or mid cap allocation accordingly. If we were actually very cautious on the mid cap and small cap at the beginning of the year, now I think the time has come when you can take more risk and have a look at mid cap, small cap, and a large cap, maybe equal mix of both.
All right, Devarsh, thank you so much for sparing your time and sharing all those wonderful insights on the markets. That's a wrap, viewers, on the closing edition of Business Today show. And in case you too have questions about investments in mutual funds, SIPs, stocks, or gold-related queries, then please do send them to us on the number that's flashing on your screens. And of course, catch all the market action in the morning at 9 a.m. with Abba Bakaya now.